Welcome back. I'm Pratap here. Today is 12th September 2024. In this video, we are going to evaluate the performance of high liquidity zones generated in the previous report. Yesterday, at the end of the day, we have identified 6 high liquidity demand zones from daily and 75 minutes time frames. So before we look into these zones, all of you please understand we are providing complete free training on supply demand zone price action. All the training lessons are available at our NeoStock YouTube channel. So at our channel homepage, you can find the tab posts. Some of you might be seeing the tab community. Whichever the tab, you click on the tab, you will get access to this post. This post is having a YouTube playlist link that will take you to all the training lessons. I'm clicking on the link. Now we are into the playlist supply demand zone price action course. So far we have completed 25 training lessons. From these 25 training lessons, we have released 65 training videos. So you need to start your training from the first video. For that you need to scroll down to the bottom of the page. Here, starting from lesson 1.1, all the training lessons are available in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this video description. So from the video description, please join at our Telegram channel. It will be helpful to you. Each time when we release a new YouTube video or any other important updates, we will provide at our Telegram channel. Now let's get into the evaluation of the high liquidity zones identified. Performance evaluation. And none of the zones are executed except Jindal Steel, which is completely violated. And we know when a zone will be violated. Actually, it's a very good zone. And it already provided multi-support, but today with gap up. So here prices moved with a gap up. This is a 75 minutes high liquidity zone. So you didn't get a chance to place the order also. Before you place the order, entire high liquidity zone is violated. Why? What could be the reason? Earlier it has given very good number of trades. For that you need to fine tune up to 5 minutes time frame level, then only you will understand. So I am changing the time frame to 15 minutes. So in the 15 minutes we have identified the ERC candle as a leg candle, and then 2 base candles, and then a drop candle. So this is the way we have drawn this 15 minute zone. Apart from that, one more within the same 15 minute zone, we have fine tuned to 5 minutes. 2 fine tuned 5 minute zones are there. I am changing the time frame to 5 minutes. See, in the recent price action, we have a drop, base, drop. And the earlier price action, we have a rally, base, drop. See, there was a price entered into this zone and again came down. Already it gave a test earlier. Prices went deep inside. So there are higher chances this zone will be violated next time when prices reach this zone. But last time what happened, when prices entered into the zone, it already picked up the orders. It gave another test. And again pushed the market down. So 2 times this zone is already tested. And today it is violated. See, with a gap up it is violated. But what about this newly created zone? This is also provided 2 tests. See, this is the first test and second time again. And today completely, even this zone and the top one, both the fine tuned 5 minute zones are violated. Because they are already tested zones. We know that both the zones will be violated this time, but with a gap up it is violated. That means there is no order flow at all in these zones. Nobody has provided new orders also. That's why easily with a gap up, the entire zone is violated. See, market opened here today. Complete zone is gone. Okay, we already identified this zone will be violated. That is what happened today. And what about the remaining? So let's look into them one by one. First one is a daily high liquidity demand zone. That is a HDFC Life. This is a rally base rally, newly created zone in 16th August. We have fine-tuned this zone with 75 minutes time frame. See here you have a drop candle, you have 1, 2, 3 4 base candles and a rally candle, drop base rally. So this is the 75 minute zone which is part of daily zone. This 75 minute zone again fine tuned with 15 minutes time frame. Let's look into the 15 minute zone. In the 15 minutes we have a drop, 2 base candles and a rally candle. Drop base rally. So this is the 15 minute zone. Inside this 15 minute zone we need to fine tune with 5 minutes time frame. Now observe carefully. This is the ERC candle. It can be used as a failed ERC. You can use it as a leg-in, you have a base and then you have a rally candle. And this zone already tested several times. So this is the first test, there is a movement, and again second test, there is a movement, again third test, again there is a movement. This is the fourth test. Maybe this could be a high liquidity zone. If you observe, if you draw a horizontal line somewhere here, it is picking the order strongly. Let me draw a horizontal line to bring some clarity. A little above or near to this, rejections are coming. So strong order flow is there. Let's verify any 1 minute zone, because sometimes 1 minute zone might be having a very strong institutional order flow. That might be in that blue color line area. So here you have a drop, you have a base, and then you have a rally candle, ERC candle. See, you may feel like this is a failed ERC candle. But this entire thing can be considered as a rally candle. The reason at some point of time prices came here and then see the huge movement and prices completely gone out of the zone. If this is the zone, completely gone out of the zone with a clear body outside the zone. That's why because I already told you, in some instances you can use failed ERC candle. Prices didn't even go inside this zone. See, what is the high of this zone? 682.85. What is the low of this candle? 682.85. Exactly at 682.85 at the proximal. The risk is minimal. There is nothing wrong in trying once again when prices reach here. So exactly here we have a drop base rally is there, which is currently holding the prices. Even just before the blue color itself, if you add some entry buffer, you will get all these trades. So those who wants to take, because it is already a tested zone, but those who wants to take a little extra risk, there is nothing wrong in planning another trade. In case if it is stopped out, a small amount only you will be losing. But if it is successful, you get a huge money. This rally, base rally, inside we identified 1 minute zone at the blue color line. Okay, here again another fine-tuned 5 minute zone. You have a rally, base, rally. But this zone is also already tested. The prices move. Actually, these are all rejections. But here price closed inside the zone. Price closed inside the zone. Go to type 2 proximal entry. So here you might be having a strong order flow. See the rejection before this. Probably here also. This is the type 2 proximal. But those who wants a fresh zone, probably it is not a fresh. It already picked up some orders. But there is a very deep order flow is available here. So definitely it may work another time. Because of this rejection, we are considering. But anyway, today prices did not enter into this zone. And we didn't get any trade opportunity. And the next one is sale. Sale, I think we already discussed how we fine-tuned this zone in the previous reports. Probably in one of these candles, probably on 10th, 9th is probably report might have given this stock in the 9th. Probably in the 10th HLQ analysis, I might have explained you how I fine-tuned sale. So I am not repeating. Please refer 10th September report. Though in case if any new members who missed earlier discussion, you can refer on that report. That is 10th September. I have explained this HLQ analysis. But anyway, today prices didn't enter into these fine-tuned zones. Because these zones we already fine-tuned on 10th September. The same thing we are referring. Next one, India Mart. Yesterday we already discussed and it didn't have a fine-tuned zone. We know that this zone will be violated, but today prices didn't enter inside. So already I explained about this zone in yesterday's HLQ analysis. If anybody wants to know about this zone, please refer yesterday's HLQ analysis video. Next one is Bharat Forge. So this is a 75 minutes high liquidity zone. We have a drop candle. This is not a base candle. This is a drop because you need to add the hidden body. Then 2 base candles and a rally. So drop base rally you need to consider. This is what our software identified as a HLQ. And how I fine-tuned, let us go to the 15 minutes time frame. In the 15 minutes time frame, I have drawn drop, 2 base candles rally. This is a 15 minute zone. But you haven't seen any 5 minute zone right here. Why we didn't draw 5 minutes? We will see once we get into 5 minutes time frame. Meanwhile, we have one more zone. Drop, base, rally. Excuse me. We have a drop, base, rally is there. Okay, now let's go to the 5 minutes time frame. Why we didn't fine-tune the 15 minute zone? The reason is, see the price action. You have a drop, you have a rally, see how many base candles. And this entire price action in the narrow range. 1, 2, 3, 4, 5, 6, 7, 8. Lot of consolidation took place. Next time such kind of zones will be violated easily. At least 80% chances are there for the violation of this zone. We already learned when a zone will be violated in lesson 16. Okay, we have another zone, drop, rally, and here you have 1, 2, 3, 4, 5 base candles. So type 2 proximal, I have drawn this 5 minute zone. But interestingly, there is another rally, base rally. If you forget about this fine-tuned 5 minute zone, and this rally, base rally is the origin for this 15 minutes fine-tuned zone. The 15 minutes fine-tuned zone picked up the orders from this zone twice, in this candle as well as in this candle, and then there is a rally candle. If you get into the 15 minutes time frame, you will get clarity. See this entire drop base rally, the base candle, see here it picked up the orders, and then even the leg out candle also. So because of this 5-minute zone, you are not seeing the leg out. I am deleting this time being. See, the leg out candle also picked up the orders from this 5-minute zone, and this 5-minute zone was created before this 15-minute zone formation. And this entire 15 minutes formation started by picking the orders from this 5-minute zone. Such kind of concept you already learned in lesson 22. Lower time frame zone as an horizon to the higher time frame zone. In such kind of situation, the lower time frame, lot of strong order flow will be there. It will support multi-testing. But anyway, one more LOTL zone is created, 5 minutes. See, this 5-minute zone and this 5-minute zone, both are overlapped with each other. So it is a LOTL concept. But wherever you take the trade, you need to keep the lower zone, the lower time frame as an horizon, LTF zone. That you have to refer for keeping your stop loss. So you need to keep this distal line as your stop loss. Or you add some stop buffer and some more below you will add. Either at the distal line or maybe stop buffer, whatever it is. But you cannot keep your stop buffer in the 5 minutes fine-tuned zone. See here, the drop base rally, the 5-minute zone. Here you can't keep. Or at least because risk is high, what you can do at type 3 proximal entry, you can fine tune. If the risk is permitted, you can plan a trade here and you can exit here, stop loss. Even if you don't convince, maybe at the proximal entry, you can keep. See, if you add a type 1 proximal here, see here, the zone is coming up to here. The newly created zone, type 2 proximal is type 3 proximal is part of this type 1 proximal entry. This is week to week if you draw the zone. This fine-tuned area is part of this. That point. So that's why, depending on your risk management, where you need to take your entry, you need to plan at least type 3 proximal of the fine-tuned zone could be an ideal scenario. And here you can keep the stop loss. This combination may give you, if the risk is within your limit. If the risk does not permit, so you have to take entry in this rally base rally, not in the drop base rally. You need to take an entry in this rally base rally if risk does not permit. Because sometimes there are higher chances from this fine-tuned area for 5 minutes prices may reach and again it will be moving up. If that is the case, you will be missing the trade. But anyway, today we didn't get a trade in this particular zone, but this analysis will be helpful to you for our future trades point of view and also learning point of view. Okay, next one is Dabur. Dabur already, earlier it gave one trade. Sorry, not this one. Today we got this one. This is the one. This is earlier one. Previously once we got a trade from in Dabur. Okay, for our 75-minute zone, this is the one. These are all the previously generated HLQ zones. We have fine-tuned these zones previously. See here we have a rally base rally. In this rally base rally, we fine-tuned with 15 minutes time frame. You will see some interesting analysis here. Even though we didn't get a trade today, but some learning is there for beginners. So I fine-tuned with 15 minutes time frame. In the 15 minutes, you have a drop candle. You have 1, 2, 3, 4, 5 base candles, and again a rally candle, drop base rally, the 15-minute zone. So that way I have drawn this zone, 15 minutes zone. Once you go to the 5 minutes time frame, in the 5 minutes, here you have a rally base rally inside the 15-minute zone. Rally base rally. And observe here, there is a drop base rally. Drop base rally. This is the origin for this entire high liquidity zone. The 75 minutes high liquidity zone, it picked up the orders in this candle, in this candle, and entire this formation took place, including 15-minute zone, the entire 75-minute zone, and prices moved. So for the whole 75-minute zone, this is the origin. This is a drop base rally. See how so here we have a strong institutional order flow. That's why it picked up the orders from this area. Again, second time. So that means we have two fine-tuned zones, rally base rally and a drop base rally. This rally base rally is at the proximal line of the 15-minute zone. This drop base rally is at the distal line of the both the 15-minute zone and also 75-minute zone. 75 minutes is the high liquidity zone. So definitely it will give us a multi-testing in the coming days. Even if this zone is violated, probably this drop base rally will work and it will be giving you a good trade opportunity. But today prices didn't enter into the zone. So that is the reason why we didn't get any trade opportunity today. So that means we didn't get any trade opportunity from the high liquidity zones today. So we have missed out trades. But HIT and DIT, definitely you would have got some trade opportunities, especially in HIT, the TCO zones. If you look into the MRF TCO zone, it has given. Let me show you. MRF. This is for HIT, hourly income trade. See, MRF is a 75 minutes bearish trade setup zone. Let me show you in the... First, let me delete this, you will get clarity. Let me explain in a clean way. Okay, this is what our software has suggested, this zone. ERC candle, base candle and drop candle. This is what software suggested. This is currently supporting bearish trade setup for hourly income trade. That is entry time frame is 5 minutes. And this 5-minute zone is having confluence with the 15-minute zone. So let's go to the 15-minute zone. See here we have a drop, 2 base candles and a drop. So this is the 15 minutes supply zone. The 15-minute supply zone is having confluence with this 5-minute supply zone. See, today morning if anybody wants to take a short trade in this, maybe your trade would have been stopped out because it hit the stop loss. But the TCO traders, what they do, they will wait until this 15-minute zone is violated. But here the 15-minute zone is not violated. It is stopped out and then again prices came down. Once again prices moved up and now this entire zone is violated. Who is the reason for this violation? Drop base rally. How can you say this is a rally? This is looking like a failed ERC candle. The reason is had the hidden body. See here the gap, it opened with a gap You need to add the hidden body here until this. Then this will become a rally candle, drop, base, rally. Now your new 15-minute zone could be like this. Because this is a drop candle till the lower wick of this legging candle you have to draw. And this is the 15 minutes demand zone. This is the 15 minutes demand zone. For our remembering purpose, let me add the text. This is 15 minutes trend change horizon, TCO demand zone. And this 15 minutes demand zone is the responsible for the creation. In case, if you did not convince this is the rally candle, still you can draw the zone like this. Drop 2 base candles and again a rally candle. Because we have to add the hidden body, it is a rally candle. That way I convinced. In case if we didn't convince, still this is a ERC candle. See here, the ERC candle. This is not a base candle. See the length of this candle, very huge. Even double the size of this candle. Of course, this is a high explosive leg out candle, high explosive. In general, if you consider this is the leg out, compared to this is the double the size. So high explosive leg out. So either way you draw, but I am convinced, okay, this is the area I have drawn, the 15 minute supply zone, drop, base, rally, and I consider this as a follow through candle. Okay, in this zone we have the actual institutional order flow at lower time frame. What is lower time frame? That is 5 minutes time frame. So I went to the 5 minute zone. We have a drop, we have a base, and then we have again a rally candle. Add the hidden body. See here, from here you add the hidden body. This entire thing is going to be a rally candle. Drop, base, rally. This is a big rally candle the moment you add the hidden body. So this is the way you can draw the zone. Demand zone. See here, earlier this demand zone was created. In the next candle, it picked up the orders and then prices were started moving. This entire 15 minutes zone creation took place by taking the orders from this fine-tuned area, and now this entire zone is violated. So this 5 minute zone is having a very strong order flow. This 5 minute zone work like a high liquidity zone. See what happened today. After that, prices moved up and again entered into this TCO zone. This is a TCO trade. Why I am saying this TCO? Because this is the responsible for trend change. But is there any new 15 minute zone is created after this, before prices enter? No, there is no new 15 minute zone. Just prices sluggish here. Some kind of sluggishness we have seen in the price action. Overall, I am not talking about the zone, the overall price action. So without a new 15 minute zone creation, prices entered into this zone. That means now this will work like a high priority, high liquidity zone. If a new 15 minute zone is created, this 15 minutes TCO demand zone could be low priority, high liquidity zone. Because there is no new 15 minute zone, definitely this will act as high priority. After that you see rally, base, rally created. Next time if you want to take another trade here, this will act as this 15 minute zone will act as a low priority, high liquidity zone. Maybe this zone may 15 minutes fine-tuned 5 minute zone might be having a strong order flow. Maybe this may work like a 5 minutes high liquidity zone. High priority, high liquidity zone. The fine-tuned 5 minute zone. It could be a high liquidity zone. Who knows? See the order flow very strong here. Okay, but if you go to the 5 minutes time frame, here we got the trade. When we got the trade at 1335 candle, 3 opportunities, 1335 to 1345, it has given. The prices stayed here within this area. You got a trade and see the movement after. So here this is a ERC candle as a leg-in base drop. And it reached this target. When it reached in this candle itself, it moved up here. Or if you can still, this is a clean and a neat, finally reached the target. At least you would have exited somewhere here. Generally what we do before reaching the zone, target zone, maybe with few, if it is a very big stock, maybe a few rupees before you will exit. Or if it is a small price range, maybe few paisa before you will exit. Because MRF stock is 1,36,000 rupees. So maybe some few rupees, maybe 10 rupees, 15 rupees before you might have exited. See how much profit it has given. The reason is the 15 minutes, the TCO trend change horizon concept. The trend change horizon fine-tuned with 5-minute zone, which is having the actual order flow. The indication, this is a strong order flow. This is the candle. This 5 minutes candle is an indication. It picked up the order, entire 15 minutes trend change horizon is created. This itself is a price action clue indicating there is a very strong order flow in this area. Until a new 15 minutes demand zone is created, this 15 minutes TCO will work like a high priority, high liquidity zone. Once a new 15 minute zone is created, then this 15 minutes TCO demand zone will immediately it will change as a low priority, high liquidity zone. It doesn't mean they don't work next time. They will work. Even after converting to the low priority, it will work. But you can't expect 80% success rate what we are climbing for high priority, high liquidity zones. Maybe that success rate may reduce, maybe to 60% or 70%, something like that. But when it is still having the high priority, high liquidity category, only we got this trade. See how sharply it moved. After that, new 15 minute zone is created. This rally, base rally. Next time prices reach here, this 15 minutes trend change horizon will act as a low priority zone from now onwards. Anyway, market is closed. Tomorrow there are two possibilities. It will pick up the orders from this fine-tuned 5 minutes, again move up, or maybe this might be violated, again new trend changes will come. That possibility is also there. But already trend is changed. Why? How can we say trend is changed? Because this rally base rally has been violated in this candle. Now sideways trend is changed to again downtrend. Now again it is continuing with the bearish trade setup scenario. Okay, but our job is completed. The TCO zone has given a very good profit from here to here. So this is the only one scenario, the TCO related concept you can observe from today's hourly income trade related. High liquidity zones, we didn't get trade opportunity. That's why, see, every day, in everyday premium reports, I've been providing Nifty, Bank Nifty related supply demand zone chain, bullish trade setup for all the income trades, high liquidity zones. If you didn't get any high liquidity trade opportunities, immediately you need to shift to the other strategies. You have everything available in the reports, in the premium service reports. Those who have taken premium subscription, you should look for the opportunities in the other. Maybe in DIT trades you can look for. Many times DIT trades will give you good returns during the intraday. The bullish or bearish trade setups. Hourly income trade, sometimes they work, sometimes they fail. But the TCO zones in the hourly income trade give very good returns during the intraday. Sometimes our TCO also will fail sometimes, but the chances are less compared to the other trade setups related to the hourly income trades. TCO works very well during the intraday. Not only intraday, even other income trades also they work. But other income trades you need to wait for a long period for the price retracement. But intraday traders' point of view, TCO in the hourly income trade is a very good weapon. You get a good profits. So here you got a very good profit from here to here. You know what is the RR you might have achieved today? Let us see the RR for this. This is the long position. This is your entry. Let me keep some stop buffer. Approximately I am keeping, not calculating exactly, but approximately. At least here, let us assume you exited here. Still you got 1:7 RR you got. Who has given 1:7 RR? The TCO zone. Okay, hope this information is useful to you. Let's all meet again in our next video. Thank you.